Good morning, everybody. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and highest probable entries to help you become a better trader. So, Bitcoin did exactly what we wanted it to do. It was fantastic. We bought it and it just shot right up like it was supposed to. It did give us a little bit of it didn't happen like exactly the way we wanted it to, but it end up ultimately happening. And you can see last night that we did take out secondary targets like a thing of beauty. You are seeing a little bit of sell side coming off of this morning, or coming out of the London session. Once you took out the high, you're taking down a pullback. That's generally what happens when you take out an area like this, right? It's a range of price, but it's the highest high. You would typically get that in a range. Once you take out the highest high, that is a liquidity run, or there's a lot of stops sitting up there, short side sellers, especially this one, because it was the 50% retracement of last week's decline. We discussed that a Saturday or 2 Saturdays ago. I can't really remember. But yeah, pretty sure it was 2 Saturdays ago. We discussed it. If you're looking to get short these areas, that's typically where you're going to want to see price roll over. It doesn't always roll over there, but that's a very good area or a location to look for potential shorts. And you can see this yellow line here. That is the 50% retracement of that weekly decline. Price traded up Price traded up into that and just instantly reversed. So it did provide a fantastic sell side signal. But if you did not take profits on that, you are now stopped out. But I warned you 3 days ago on this day right here. Actually, it was this day when I warned you and said, if you did take this short side position, I hope you took profits, because it looks like price is now looking to run your stops. And it took 4 days, but eventually it got there. These ranges are not very big. That's also why we were expecting a move. Let's get rid of this real fast, and we'll go down into the near-term price charts so we can discuss this trade. So this is typical. This is very typical price action, and its complete and total objective is to get as many people offsides as possible, because that generates liquidity for the actual move. So price trades up into this area here. That was a pretty big green candle. Trades down into support, holds support. Then you get a move up and then an explosive move to the downside. This is the level where we bought it. This is that daily support. This is why I'm trying to always be, or this is why I drill this stuff into everybody's head, and I'm always consistent in the way that I do this analysis, is because it's the right way to analyze price. It is the levels that price respects. Every other form of support and resistance out there does not hold a candle, forgive the pun, to this strategy. Here is daily support, that last bearish candle in this move higher. If we go back to the hourly, you can see that right there. I mean, does it get any tighter, better, closer, more accurate than that? You get a nasty push to the downside on an hourly time frame. This bearish candle right here scared everybody, me included. Right? Me included. I was looking for this level to get tested, and that's where I was looking to become a buyer in this range, but I didn't think it was going to happen in 1 hour. Okay, so yeah, a lot of momentum coming into the level, and then a lot of sideways price action at the level. You can see here you started to trade away from the level, so this is to lure in early shorts, people without any patience at all, not shorts, apologies, longs. People without any patience at all, they automatically get long. Our stops were big, right? They were pretty wide, because it's impossible to know where price is going to go. We just know what levels get respected. We know all of that, but we don't know which way price is ever going to go. These are trading entries at high probable areas consistently. This is what you must learn in order to become a professional trader. Price trades away from the level, and then boom, another big bearish candle right back down into the level. This probably shaked out anybody that got long on these 3 hourlies here. More than likely, if they didn't have their stops below there, they were stopped out. then price makes its actual move. Boom, boom, boom. All the way up above this. So anybody that got short here, they were on the wrong side of the trade. Now, this was a profitable trade. Don't get me wrong. Anybody that got short here, and if they were aiming for support, because that's how we trade in range-bound environments, this was a profitable, perfect trade. If they executed and took profits, you can't get any better than that. That is the entire move of the downside, and you capitalized on that, then kudos to you, right? But you were on the wrong side of the market. The actual move was the long, and that target was here, all right? So now that was the high probable move. That was it. So now we just wait. There's nothing else to do. I am still long this. I took profits when we pushed up into this supply zone here because that's what we do, right? And also there was a daily level there as well. But it was on the other side of it, right? But still, nevertheless, when price trades up into those areas, you have to respect them because you never know what price is going to do, ever, ever. So as price trades up into this, it was like a 5-to-1 or something crazy like that, risk to reward. We took profits, moved the stop out to break even. So now we're trading with the bank's money or the house's money or the casino's money, whatever you want to call it. It is a legit risk-free trade as far as when it comes to my capital. Now, there is still risk on the trade. It is the unrealized P&L. That is currently what is being risked on this trade. Any unrealized P&L I have right now obviously will be depleted and gone if price trades back down to 36,840, which is the daily support. But I do not believe we're going to see that, and we're going to get into that in this video. So now as we're doing is waiting, you're seeing this move. This is, like I said, once you generate that liquidity, once you get above where all those stops are, depending on what happens to that liquidity will determine which way price goes. There is no way to expect it or to know what's going to happen. So a lot of times if you think a liquidity area is going to be a good place to take an entry, like in a range-bound environment, you want to take it to the opposite side. The best way to trade that is to wait until you physically get the signal. How do you see the signal? The signal is when you trade up into the liquidity, much above the liquidity. Not just tap the level, but like this, a wick through it to make sure you get anybody that's short that asset. They're going to trail their stops down to that highest swing low. This price trades well above that swing high. Apologies. Price trades well above that swing high, and then boom, there's your explosiveness. So this can tell us that for now, the supply was sitting above liquidity. You're back down into support. So this is also a very strange move because the DXY is falling. You can see here on the hourly, the DXY has had a pretty much one-sided move since last night with this pullback, slight pullback at London, and then you're heading lower. If we go out to the daily chart, you can see that here. Nice red day on the dollar. So why is Bitcoin coming off? I can't answer that question. What I can tell you is that the yen pairs are moving higher on Aussie and New Zealand. I mean lower. Yen is strong this morning. So the Aussie yen is moving lower. It looks like you are getting a retracement on that, which is what we were expecting inside of the Trade Talk Discord. We were talking about potentially getting long Aussie dollar last night because of a lot of reasons. So basically I told everybody to watch 2-hour support, but ultimately daily support, or that Heath level there, that is daily demand. We had the RBA last night, so the news comes out, boom, price trades lower, liquidates these people, and these people. But this is daily. This is the Heath level. This is what you're looking for. That's what you want if you're looking for buying opportunities. So this push lower was nothing more than a buying opportunity. If you took that trade last night, congrats. you were on the right side of the market this morning. I did not. I do not like setting limit orders out. I have occasionally, and I will occasionally, especially if I have a very high conviction on the setup. I will sometimes throw out a limit order, but I would much rather take the position while I'm watching price, because I can immediately back out of that position if it starts to go against me, instead of eating a full percent stop. Give me 1 second. All right, excuse me. So yeah, I would much rather, manage the trade while the trade is happening. That's just my personality, right? I don't like to just throw risk out there. My thing as a trader is I hate to lose. I absolutely despise it. So I don't want to do it if I don't have to. If I do not take a trade all week long and I go into the week neutral, no wins, no losses, just neutral, that's always better than going into the week red. Always better. So keep that in your mind. Obviously, you can't make money if you don't take trades, but you shouldn't think that way. You should think you can't lose money if you don't take trades. That's the way you should think. Losing money is not good. It's not fun, and none of us want to do it. So take high probable entries. Daily Heath level, near-term uptrend shifting in dynamics. That's a high probable entry. That's what I told everybody to wait on. I don't know if anybody executed it or not. Obviously, that's scary to buy into that much weakness. However, that's just the market's way of, scaring people. So that's working out fantastically. Now, the main reason we're looking for Bitcoin to trade higher and potentially test the yearly open is because of what is playing out on the DXY and the dollar pairings. So going back to the DXY, well, the DXYU is not an asset. Come on, TradingView, you know better than that. You know what I'm thinking. All right, so we're going to go out to the monthly chart. Now, first and foremost, I want to say this. Trend lines are subjective. They're subjective in the way that people apply them, and they are subjective just because on log standard or log scale, they're different. So if I hit log on, you can see that trend line changes, right? So on log, this trend line comes in here beautifully and holds the DXY. It's 2 touches from May 2011 and the candle to May 2014. So 2 years there. Boom, boom. You can see that it didn't test here, but it is a dip into that area. Break down, retested. So now you're back into it. So we don't really pay attention to trend lines to take entries. We more or less put most of our focus on price levels, because price levels, actual price levels, resistance, support, those are the levels that price respects. Excuse me, I forgot to shut my phone off, or at least make it quiet. Excuse me. All right, so here we go. You can see this maroon level here, or red, whatever you want to call it. That is monthly support. That was the lowest monthly close till you broke down here. This is the first time you've traded back up into it to retest it since that breakdown occurred, right? Last year, or 2 years ago, apologies. At COVID, right? 2020, the March 2020 sell-off, that's when this occurred. And then you can see here for the last 3 months, boom, boom, boom. We are testing that level. Now, on the monthly, the DXY closed above that resistance level yesterday. So this has to make our bias near... Who's calling me at 5 o'clock in the morning? Oh, it's an alarm. Sorry. Near-term bias has to be lower for now because you're into resistance, but you can see this monthly resistance level here at 95.891. That will be the point to where our bias goes from near term lower to higher. This is potentially where the dollar could turn around. It could find support here, right? Not exactly there, but the support level of that monthly. So 95.670 is your actual support, and then your actual demand level would be 95.936. Either one of those two price can absolutely find support, turn around, and continue higher. And at that point, Bitcoin would obviously probably suffer. But right now, we're looking for Bitcoin to potentially trade up into the yearly open, as that is going to be the place to look to get short potentially. Potentially. All right. So yesterday we closed. Let me get rid of these three levels here because I can always apply them back to the chart, but we already discussed that, the secondary profit targets and everything. All right, so yesterday we had a new monthly close, or a new monthly open rather, and look where we closed. You closed in between this monthly support at 43,824, spot 43, and $35,060 even. 35,060 in the middle is where you closed. So bias near term higher, maybe, right? Maybe a little higher because we were able to, after testing support, trade up off of it. And that's those few green days that we have going on currently. And then obviously this is your yearly open 2022. Your yearly open is $46,211.24. And this is the Coinbase data feed. Now that yearly open price is going to be different on other exchanges, but it's going to be relatively close. If you're using a different exchange than Coinbase to place your buys and your sells, then obviously use your price, your monthly open or yearly open, which is also last month's open. Use that one, all right? It'll act the same as support. So moving on, we're looking for Bitcoin to potentially, or at least come back in for a retest of old monthly support if it can't get up to the yearly open. But if you're going to see more downside on Bitcoin, what better of a place to look for potential sell side entries than the yearly open? Always remember, don't just blindly buy there. And since it is a yearly level, you can definitely get several months of trading inside and around and through and up and down that price. Right? You can close higher 1 month, close lower 1 month, close higher. It's a yearly level. But I do expect you could potentially see a lot of resistance there as who or where is the best place to get long or short if you're looking for a longer term trend or a longer term trade. Yeah, you're right. The yearly open. Because that yearly open could potentially be where you want to get long or short for an entire year of continuation. All right? Because yearly candles work exactly the same way as hourly candles, daily candles. They all work the same. Last year, 2021, the yearly open was a fantastic place to buy, wasn't it? As long as you took profits up into the $50,000, $60,000 region, fantastic place to buy. What about 2020, yearly open? Fantastic place to buy. Right? What about this candle? January 2018, yearly open? Fantastic place to short. Okay? So that's what I'm trying to say. Yearly open, fantastic place to look to put on risk to the downside. Potentially, but we'll wait and see what happens when price gets up there. But that is what we're looking for. So I guess near term or longer term, we are looking for a push up into that yearly open. It doesn't have to go all the way to the yearly open. You can see here that you have a quarterly Heath level at $48,824.43. That's this bullish candle here. That is that monthly support. All right, that's also your quarterly Heath level demand. So you don't have to go all the way up to that yearly open. You can absolutely roll over from there if price is even going to roll over. So it doesn't go in one direction. Price never moves just straight up or just straight down. You have a lot of in between, a whole lot of it. Let's go out to the 2 week and let's go back to the last bull market phase we had on Bitcoin, 2017 and to 2018. Now these are 2 week candles, but once you set in your high, you had a pretty decent move to the downside. And then for 1, 2, 3, 4, 5, 6, 7, 8, 9 2 week sessions. So that's 18 weeks. You traded inside pretty much of that 2 week candle here. Now you did pierce it here, but you get what I'm trying to say, right? Long time you traded inside of that range after your initial move lower. All right, so let me get rid of this and we'll go back to near-term price. And here we are. Here's your first initial move lower. So now we can set in this for 20, 30 weeks of sideways choppiness. You can get all the way up to $55,000. You can go all the way up to $60,000. If you get above $60,000, then I wouldn't be looking to short Bitcoin anymore, because $60,000 is where the supply is. If you're going to roll over, if Bitcoin is going to continue a bear market, $60,000 is where it's going to stop. But I don't know if it even gets up there, right? We can't predict what price is going to do. We cannot predict what price is going to do. We are not weathermen here. We're traders. So if we get some near-term downside on the dollar from that monthly res, then that could give us enough bullishness to get up on Bitcoin to test either quarterly Heath level, monthly support, or your yearly open. Let me check chat, make sure I'm not. Good morning, good morning. A lot of good mornings. How is everybody this morning? Bears, Bulls, there's no crying in baseball, says Slothbag. You are absolutely correct, my friend. KF says, good morning, brother. Very first one in the comment or in the chat. Would you please do CRV, USDT on KuCoin, and also Algo? Yeah, we'll do that. Let's first go look at Euro USD real quick. So if we're looking for some near-term down on dollar, then you're probably going to see near-term up on the Euro. You can see that Euro USD also has that long-term trend line coming into play there. It's not as good as the dollars. You can see that there. You didn't test that. So with off log, let's see what off log does. Yeah, it was off log. Sorry. There's your test. Swing high. Not quite a test. There's a test. There's a test. Test. Right? There. And then now you're into it. So you could see some potential near-term support on this asset. Last month's closed, so that's where we're going to potentially look. I don't know if you tested that. You did not. But you do have a monthly level there. You have this swing high right there. That bullish candle. That's resistance until you get a monthly close above it. You did get that monthly close here. You did come back for a retest on this one. Right there. That wick lower. Boom. That's your retest. Trade it away. Now you're back into that level, and you can see that it has held price for multiple months. So we could potentially see a bounce here, right? If the bears are unable to push it lower, then generally you go the other direction or sideways. This thing was sideways for a long time. On the daily, you can see here, sideways for a very long time. It was very difficult to get a read here on this asset as well as the dollar while it was trading sideways. We break out of the position, or out of the formation rather, to the upside, which as we know now was a selling opportunity. It broke out with some vengeance, so we did not take that position, right? Did not take the position. You also broke out of a near-term downtrend on the daily. Well, no, you didn't. Was it on log it did? No. Huh. For some reason, I thought this broke out of this downtrend, but I guess not. Well, hang on here. I'm not exactly. There it is. It did break out, but it was just a trap. And I discussed this not too long ago, how you would have taken that position after this bear candle here, because you would have known that was a trap. That would have been the level you would watch, because it absolutely held as support or resistance, apologies. And the next day you closed above it, that's your bull trap, right? Bearish engulfing, boom. Next candle, next day, you trade right up into your Heath level, supply, and then you roll over, right? In a downtrend, that's what you're looking for. That is an absolute phenomenal setup. All right, so let's go look at USD or Algo USDT. For a KF on KuCoin. So they're trading in this range. Last live stream we had, obviously I discussed this, and it's still trading in it, right? Let's see, on that daily, did you take out the liquidity? You did. So on this day here, that's when you took out this liquidity, and then you did get a move lower, but that move lower has since been bought back up, and you're into daily res. You have two of them now, right? You have this one, which is still intact. Test, 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 test. Then this one. But now you have this one. And so far, look at this test. It's holding. So your daily res is holding price currently. Give me 1 second. I have to let my cat out. I'm coming, baby. Daddy's coming. Here you go. Yeah. Pepe is the king. He gets what he wants. All right, so yeah, it's traded up into two daily resistances. I mean, if Bitcoin continues higher, then I would suspect this thing will get a breakout. But I mean, if you're going to take the trade in expectations of a breakout, then you want to take it as close to support as possible. And you know where support is, right? Here's support and here's support. This bearish close and that bearish close. So, I mean, you can see how far this wick traded below those two levels, right? So it didn't treat it with respect as clearly as you will get in some instances. But, I mean, that's the price at which part you're going to be looking for potential bullish entries. And that would have been probably on this candle. That would have been your entry, as that was the entry on Bitcoin, right? That was our entry on Bitcoin. When you traded down into support, it was a different support, but it was support nonetheless. So there's nothing to do on this one right now. If you did take the entry on this for the long, hopefully you did scale out on the way up, and hopefully your risk is completely off the table. That in the form that your stop loss is now setting above your original entry. And if that's the case, then you don't have to do anything. It's a fantastic place to be when you have already made money on the trade, when you have no more risk on the trade, when you have a stop loss in that is at break even to protect your original entry. You physically do not have to do anything. The people that have to make moves inside of the financial markets are the people that are underwater. The people that are making money don't have to do anything at all, ever. When you're in the money, you just sit by, relax, and wait. That's all you got to do. So if you took the trade, congrats. If you didn't, you're not looking to take it now. Right? I mean, I'm sure people was going to be looking at this as a potential place to get long, looking for price to trade above it, come back into it, retest it, and then go. And that may work. It may happen. But you're trying to get long at resistance. So just be careful. And that's Algo and the CRV USDT. Let's go look at it. ARV USDT. Same scenario. I mean, all of these cryptos almost look identical, but this one has broken out. OCRVT has broken out above resistance, but you still have not taken out this candle's high yet. So you're still in a near-term range, this candle's range. You did penetrate this candle's range to the downside here. But you can clearly see that price rejected from down there. So next place is going to be the open and then the high, which it looks like that is the target. It's the same scenario on algo. There is no trade to take right now. Currently, if you're wanting to get long here, watch the open of today. I don't know what else to say. Or yesterday's open. One of those two places. It doesn't mean that it's going to work if you take the trade there. I wouldn't take the trade there. The trade is always best taken if you are taking it as support. That's crypto. FX, I might take a trade like that, but this like a day trade only. I'm only looking for the daily high to be taken out. If I were to get long at, say, today's open, my bullish target would be today's high. Stop loss, probably today's low. But when you have a big move like that and then you come all the way back down to the open, that's typically not what you want to look for to get long, and you are in a downtrend. I'm not going to, taking that trade on Bitcoin was catching a falling knife. That's exactly what it was. I made every single person that follows me aware of that. Getting long here is trading against the trend. It is buying into sell side momentum. It is a trade that if you take that trade, 9 times out of 10, you will be stopped out. It was more or less a gamble. Now, the place at which where we were looking to take the entry and all that, that's all skill. But as far as not getting stopped out was just pure luck, right? Because we were in a near-term downtrend. But we have been for so long, and we were looking for a bounce. We've been looking for a bounce since the last decline. So, yeah. And the reason we were looking for the bounce on Bitcoin is simply because of 2-week bullish divergence. I did see someone made a comment on my YouTube page talking about the bullish divergence on the daily, and then they deleted it for whatever reason. They deleted the comment. When you do that, I still see them. I still get the notification. I still see it, but obviously no one else can, and I can't comment on it. But this is what they're talking about here. So you can see here that you put in this close here and a stab lower. That was the peak of this area here. Then you traded higher, starting to go higher. Then price made a lower low right here. That is a lower low, no doubt about it. Yes, it did close up. So you get divergence. That's what makes divergence. Okay? It's when price makes a lower low, but the oscillator does not make a lower low. It is very near term, very close, and I'm sure 100 people will want to argue to me that this is not bullish divergence. But I beg to differ. It is bullish divergence. Price made a clear lower low, and your oscillator did not. I understand that the oscillator tracks the closes, but it still is what it is. And what it is you have a lower low on price and a higher low on your oscillator. That is divergence. That is exactly what divergence is. It just happened near term, 3 days later. So, yeah, it was divergence. Anyways, moving on. Hopefully that clears it up for you. I know it's hard to, people struggle with this stuff because everybody's got different rules and definitions of what some of these technical terms may be. But it's as clear as day, right? Divergence is that. So here we have hidden bullish divergence on the 2-week time frame on Bitcoin. That was the bullish signal. This is why we've been looking for a bounce, right? You have a low. You have a higher low on price. You have a low on your oscillator. You have a lower low on your oscillator. That is hidden bullish divergence. So that's why we were looking for potential bullish entries. Also, prices extended to the downside. And it has been. On the daily, you hit oversold regions twice. Boom. Boom. You are oversold. That means you are extended. So we look for a bounce. It doesn't have to bounce. It can absolutely trade up and roll over again, especially now that this oscillator has cooled off. And now you're well above the oversold regions. So just because I'm looking for price to go higher, that does not mean it has to or will. There is still meat on this bone to short because your oscillator is now above oversold. Now it's time to sell it again. All right? I'm not saying get short right now. I'm saying that's just how price works pretty much. So there is room to short it. I'm not shorting it. I'm not looking to short it because not here. I want to short it higher. But that's it, right? Damn it, I wanted to get an early night tonight. Then I get this notification. You can always watch later, my friend. You do not have to watch live with me. Thank you for being here. Good morning, good morning. Can I get... Oh, good, I can get some coffee. Yeah, absolutely. Thank you for the free content and not some $1,000 thing. Okay. You are welcome, my friend. Got my coffee and cigs. Let's rock. Cassidy, smoking is bad for you. Yes, it is. I just got out of the hospital because of smoking. So I am currently trying to quit. I'm not really doing a good job of it, though. DXY, bearish, divergence on the daily and weekly RSI. Can you please have a look at silver? Yeah, let's go take a look at it. Well, it's not just from smoking. It's from years of not doing what I'm supposed to do. All right, so silver has been... It's been a difficult trade for a little while. Let's get this over to support. We have a longer term support down here that's still intact. It's a weird, wacky trade right now, right? It's sideways in a bigger, longer term range. So, I mean, if you're looking to get long, look to get long around supports. And until you break down or break out, which at this point in time, you've been in the range for a pretty good amount of time now. And it is a very wide range. So, like, there's your support and resistances of your range here. There to there. It's a very wide range. So, I mean, you do have daily support coming in here, and it was tested. This one didn't test it, but that's showing you that people were looking to buy it here. And with this bullishness coming off from today, that's from the dollar weakness, but people did buy support. So the support test was the entry on silver. Where does it go? Last support was around 22.98, so that would be targets. 22.96. That's where I would look to exit the position. Because that could potentially be resistance. You're below the 50, so the bears are in control of price. Let's get the right one up here. You are below your 21 exponential moving average. So, I mean, I would be looking for sell entries or sell side entries, looking to sell rips, but at the same time, it's ripping pretty bad. Like anybody that tried to short here, they got smoked. And then anybody that tried to buy the dip here, they got smoked. So it's one of those scenarios where technical analysis isn't really working out so good. So when an asset's doing that, when the long trades are not working and the short trades are not working, I'd leave it alone. Now, if you own silver and it's just a hedge or whatever, because, you know, my daddy's dad bought silver and gold. My dad bought silver and gold. I own silver and gold. It's one of those scenarios, right? If you just own it, then don't even worry about what near-term price action's doing. It's when you buy stuff like gold and silver, it's for the long term, like forever. You only sell that in a pinch, right? When you need the money. If you don't need the money, then you pass it down to your children. I don't really see an entry. The trade entry would have been looking to buy support, and that's already occurred. So now there's just nothing. I know. That's probably him answering the other guy saying smoking is terrible. Good morning all. Good morning. Hi, thanks for the stream. Please, what is your view on Wyckoff? Everybody keeps talking about it. That right now, Bitcoin is in Wyckoff accumulation. Listen, everybody's gonna... I talked about Wyckoff before the 50% retracement on Bitcoin, right? And my main thing is people will give things to names to things, but it's just the same thing that's been happening on price action forever. The only reason it's called Wyckoff is because some dude with the last name Wyckoff wrote a book about it, right? It's not like he discovered it or anything. He just seen this and put a name on it. It's a 3-drive topping formation. There's another term that's used for this exact formation, but it's a little racist. And I'm not going to say it, but that's another term for this exact scenario. That is Wyckoff distribution. It's when price makes lower or higher highs, but the highs are I can't even think of the damn word. When the highs are not very high, right? You go up, you make a new all-time high, and instead of squeezing, you immediately pull back. So that's basically distribution. And the analysis behind it, or the theory behind it, is when retail's propping price up, big people are selling into this move higher. But they're not like dumping everything. They're dumping a small position, like a third of it, because if they dumped everything, it would cause a crash. So they dump a little bit, and then they wait for retail to prop it back up, and then it goes a little higher. They dump a little bit more. Same scenario. Retail props it back up, and then they dump the rest, the final piece, and then boom. So it's distribution. So accumulation would be the exact same thing. You would be looking for insignificant lows. A low to be put in, then another insignificant low. And I mean, it doesn't have to be 3 times. It could be twice. It could be 4 times. But are we in Wyckoff accumulation? The answer is no. This is an obvious downtrend. This is an obvious bear market. That is not Wyckoff accumulation. Wyckoff let me do this. This would be what Wyckoff accumulation would look like. And I mean, I don't care if you want to call it Wyckoff or whatever you want to call it, but the understanding why it works is more important than understanding what you want to call it. So this would be Wyckoff, right? Something like this, something like that, and then something like this, right? You have a low, then you get a pop, then you get an insignificant lower low, meaning it's not an expected move or a measured move, because a lot of these are measured moves lower. So that's the reason why they tend to work out, is because people are taking profits because of the measured move. So in a Wyckoff accumulation formation, it's simply because the measured move did not work out. So once that happens, then your larger firms will be like, well, since we didn't get a measured move on the last move, we could be in an accumulation phase, hence why it tends to work. Hopefully that explains it. But your measured moves lower, once your measured moves lower stops, and it didn't. This is a perfect measured move lower. This move here. This is not Wyckoff accumulation. It might go higher, right? I'm not saying that Bitcoin won't go higher from here, but it is not Wyckoff. Not Wyckoff. Not accumulation. This was an absolute perfect measured move lower. So this is just a pullback until you get above this swing high here. Until you get above that, this is nothing more than sideways choppy price action, a range, a pullback. Now if you roll over and make a smaller low, insignificant, right, just a tiny bit lower, and then you pull back again for several days, and then you make another run, then that will be Wyckoff. Or what Wyckoff looks like and acts like. But it's based on the same formation. 3-drive topping formation or a 3-drive bottoming formation. If you want to call it Wyckoff, call it Wyckoff. I choose to just call it what it is. And that is accumulation. Not because Wyckoff said it is. It's just what it is. But no, it's not going on right now, my friend. Good morning, everybody. Louis, good night where I am. Good morning where you are. Well, good night, Louis. Good morning, says Ray. Ray, what's up, my man? Michelle, good morning. Oh, wait, YouTube the chat just skipped out on me. Apologies. Let me find it. Do Patreon members get a symbol by their name too? No, that's only through YouTube. I don't have any control over that either. I mean, I can choose different symbols, but I just use the stock ones. I'll probably change it one of these days. But no, they do not, my friend. They do not. And Ed answered the question for you. Can you check SPY and Tesla? Absolutely. So the S&P 500 is trading up into our area of downside continuation. If we're going to see it, we would probably start looking for it currently. Where price is, you traded down here. This is last week's decline, or 2 weeks ago, sorry. And then what you want to do is when you have a decline like that, you take your fib retracement level, and you can see that we're just now starting to get into it. I don't like the signal quite yet, but if you want to sell this would be the spot to do it. It doesn't mean that it's going to work. It never means that. It just means that it is in the area where if we're going to see more downside continuation, like if this move has significance and we're going to see more from this move, then this is where people will want to look to potentially get short. The problem is you are currently shorting it into strength, which is when you're always going to be shorting. Let's go look at the SPX 500 USD as it gets rid of any gaps. Also shows us what's transpiring in price action right now. You can see on the SPX you're not there. That is so stupid. Why is the SPY there and the SPX isn't? That's why. Much bigger range. Yeah, you're just not there yet. So you could get another spike on the S&P on SPY. So what I would do if I was looking to short that on SPY, which I might, I wouldn't watch SPY. I would watch this. Right? Because if this continues higher, which it might not, maybe people are shorting the SPY and that's enough liquidity to push the SPX lower. I know SPY's in a spot where potentially you'd be looking to sell puts. So we'll watch it on the open and see what it does. Right? Good thing about puts is you can buy them in the money and just set on them until price trades higher, and then you can just exit them. We'll go back to SPY. Because you are there. But I mean, it was strong yesterday. So you are into it and you are seeing a little bit of pullback, but I mean, nothing major. If it's going to go lower, I'd probably wait on the actual 618 test. Because that would get you above yesterday's high also. Liquidate any of those people, then potentially roll over. If anything, it could be a near-term short side entry for like a day trade. But we'll have to wait and see how it reacts on open. On the open. I don't see anything on the hourly to short it against other than the 618. And with your Fibonacci retracements, I like it. I use it the same way as I do trend lines, right? It's subjective in the way it's applied. The numbers themselves are not subjective, but its subjection comes from its application. And people tend to use them differently than others. I use it differently than a lot of your normal YouTubers. But yeah. So it is in an area where we can potentially look for more sell side activity. So we will keep that on watch, and we will look for potential entries on that. And then Tesla. So many people, man. Tom Nash, I'm a follower, subscriber of Tom Nash, and I love him to death, but I hate when he does his little, I told you, because if I did that, I'd be saying it almost every single day. I told you. He said it was a good place to buy, but I mean, it's just natural, right? We know the Fed's going to hike interest rates. We know that should be in March, or at least there's an 80% chance that they're going to hike in March. We just don't know how much, right? So this initial move lower is just the market pricing in that first hike, okay? As far as looking for a crash, I don't see it happening off of rate hikes, not just one or two. Now, if the Fed hikes 5 times this year at 50 BPS each time, you will see a crash. But if they go slow, little hikes, I think the market could withstand at least 3 this year, right? Without crashing because of it. Now, that's just me. That's just my opinion. But, yeah. I mean, if you want to buy the dip, that was a dip. You are in a downtrend, a daily downtrend. You started over here. You did make a higher high, but you didn't take out this high. So the downtrend remains, which, typically that's where you're looking to buy. If you want to buy Tesla, the time to buy it was here. I mean, if you want to buy it for a long-term hodl, you can buy it right where it's at because it doesn't matter what it's doing today or tomorrow if it's a long-term hodl. It matters what it's doing in 10 years from now or whatever your long-term is. But as far as taking a day trade, right now, it's the trade is to the downside on the S&P 500 or on SPY. And this thing is inside of the SPX. It is one of the baskets of currencies that's in the SPY. So if the SPY gets hit, this will too. So just be careful. Let's go look at last week's range. See where we are in relations. Not last week, but the decline. See, this didn't even have a bad decline like the SPY. But last week, everything else closed bullish. This thing closed bearish. So it could start to roll over. So you're well above the 618 there. And last week's candle is irrelevant. So you're not going to get, there's no point in looking. That play's already played out. All right, essentially. This wick up into this week's 50% retracement was the trade. It didn't go all the way up into it, but that's already played out, and you're well above the 618 here. So it looks like that for the moment, the bulls are in charge or in control. I know yesterday we were getting close to the outside expected move to the upside, the weekly options expected move. So we could see a pullback on these assets today or tomorrow. But if the DXY continues lower, then you probably won't, right? They'll just go up. So be careful. Paulo B says, legend. Thank you, Paulo B, my friend. That's a fantastic compliment every time people say it, because I don't feel like a legend. I'm just trying to help you guys. The reason that Bitcoin is getting some pressure right now is because of the S&P 500, which has faced some resistance right now. Yes, Bitcoin is a risk-on asset. Absolutely. For sure. No doubt about it. Solid analysis on the previous live stream. He'd love it. Thank you, Danny. Thank you for your continued support, my friend. Heath, do you think the 50% retracement rejection is not in play anymore? All other moves did not reclaim the 618. Is this something that you are still paying attention to? Yeah, on Bitcoin, no, we're not looking to short Bitcoin on that. When I spoke about that, it was just to teach people, for the future. I wasn't necessarily doing it to say we want to short Bitcoin again. Bitcoin's at the lows. And you know how much I despise shorting into support or into the lows, right? And Bitcoin's been on a one-sided straight move downs for so long, 3 months. 3 months straight down. So no, we're not looking to short that. But the trade did work on the first run through, on the first pass by. It did end up working. I didn't take it. But you're not looking for short side entries right here. You are correct. We are letting it run by. Let it get up to the yearly open. We'll watch that area for potential short side entries. At the beginning of the video, I went over the analysis. Or 55K, right? The yearly open or 55K. Chances are, if it's going to roll over, I don't know if you will get, that far above the yearly open. Oh, yeah, okay. I should have just read your next comment. Oh, I'm late. See, you talked a bit about it already. All's good. We're all friends here, right? Pepe, yeah, that's my cat. That's my man. He usually lays on my desk with me. He's ready to go outside. James L says, Fed hike interest rate, but DXY goes down. They haven't hiked yet, my friend. The market's pricing it in, right? It's pricing in that move. I don't know how long you've been here with me, or I don't know if you follow me on Twitter, but there's in the description, we'll show you how to follow me on Twitter if you want to follow me on Twitter. But when we made this move right here, I said that it looked suspect because of the hikes. We know the hikes are coming. So the fact that the DXY was selling off looks suspect to me, because rising interest rates are good for the dollar. That's bullish for the dollar. So since there's an 80% chance that the Fed is going to hike, there's your move up. That's your repricing right there. That's the market pricing in that first interest rate hike. So anything else is just, that was the move right there. This is just a pullback off of that move. But we have not hiked yet. Have not hiked yet. So keep that in mind. All right, let me go back up where I was. There I was. Perfect. When Bitcoin 20K, your guess is as good as mine. When Bitcoin 200K, the next comment, your guess is as good as mine. Thank you, Heath, for the live stream. You are welcome. K4 Liberty, thank you for being here. Got my Addy, let's go, says Louie. Adam Marshall, quit smoking. Quitting smoking is easy. My dad did it all the time. That was funny. Yes, that would be, yeah. Oz says you should read Easy Way to Quit Smoking by Alan Carr. It really is easy. I know it is. It's a mental thing. There's no physical addiction to cigarettes. Yeah, I want a cigarette the longer I go without one, but I don't get like sick from not smoking. So there's no physical addiction. It's more mentally, I guess. Let me say this differently, because there is a small physical addiction. The nicotine is what makes you addicted, but there's no withdrawal symptoms. I've never experienced them anyway. Let's go with that, because I have quit before. And it's just a mental thing. Heath, do you mind have a quick look at NAS 100 and gold? Yeah, let's go look at gold first. I'm pretty sure it's going to look pretty close to silver. And then we'll go look at the NAS. And then we'll probably wrap it up. All right, so here's gold. Yeah, it does look very similar to silver. You can see that it's not really, like I said on silver. Your support did not hold. Your resistance did not hold. So right now, when you're doing that, there's... Yeah, you could have taken a short based on that daily Heath level. Now, obviously, that's in hindsight. But in a range-bound environment, the higher your range is, like that move up, typically that's where you're looking to take your shorts. Right? Same scenario over here. Once you put in this big move lower, you came back, tested the high side of the range, then back lower. So you're just setting in a new range. Price traded up into the daily Heath level and then away. So there's supply sitting at 1857.30. And then right now you can see a bit of demand coming in. There is no physical demand level there, but there is daily support. There could be a daily demand zone there on a 12-hour or something like that. But there's daily support there. Multiple tests, multiple holds. So watch 1788, spot 95. If this, it's not bullish. Let's see. Yeah, you're below the 50. So this bounce in price is going to be looked at as a selling opportunity. Potentially, right? Not always, but potentially. So watch 1813, spot 820 for potential shorts. Let's see where your 21 exponential moving average is. It comes in there as well, around that area. So there's two confluences there. And you could potentially see your RSI hit the 50 up there as well. Now, if it gets up there today, your RSI is going to be well above the 50. But if it like settles out here and then you have one more bullish day, then I would say that's probably where you would see it start to get resistance. So that would be what I would watch for gold for the near term short. And then you said NAS 100. And then that'll be it, unfortunately. I got to get ready to trade something. Global Prime US. Let's see if it's USD. If that pulls out the OANDA. Yeah, there it is. All right, let's go check our weeklies. Oh, yeah, beautiful. So this is another one of those scenarios. You can see that you're getting close to your 50% retracement at 618. Also, you have this weekly low coming in right around there as well. So a pop up into there could potentially smell some resistance. You're below your 50 on the weekly. So, wow. NASDAQ got busted. Damn it. I didn't know that. Are you below the 50 on the weekly for the SPY too? So, yeah, I mean, selling the pop is the trade. You're below your exponential 21. But the thing is, with these assets, bounces or pops and, or, excuse me, pullbacks usually get bought up, right? They usually get bought up. Every time there's a red week, people are so quick to call a market crash. And you don't have that. Do not have a crash. Well, to be fair, you're almost down as much on the NASDAQ as you were in 2020. %32 down. No, you're not. It looks worse, but it's not. That is so weird. Let's do it in log. Log will show us that it's not. Yeah. No. Right. That's much bigger. Yeah. So, yeah. But, yeah, it looks like watch for the sell side entry. So, this right here, let's go back to the SPY real quick. Yes. Yes, yes, yes. So it doesn't mean the short will be today, and it doesn't mean the short will work, but I will be looking for short side entries today on the S&P 500. Because you are coming into the 50 on your daily, on your weekly. Everything is, it just screams sell. But like I said, remember, this asset usually gets bought up unless there is a physical condition inside of the macro that says that the markets want to reprice lower. Interest rates can do it, but I just don't think one interest rate hike that is potentially going to happen is enough to cause the SPY to sell off. But we'll see. This is where you want to look for the short. So today might not be the short, right? Today might chop people up all day long and then stop out everybody, and then tomorrow could potentially be the short. So just be careful. We know that daily traps exist, and you are at an area where a lot of people are going to be looking to take short entries on the S&P 500 or the SPY. So be aware that we could see a trap today, and the actual trade might not be until Thursday. But we'll be live Thursday as well, so we'll have more data and we'll go from there. Thank you guys so much for being here. I really appreciate the support, always. I have a really good core group of people here that are generally here every single time I go live. And I just want to say from me to you, thank you so much for that. If you have any questions about what I discussed in this live stream after YouTube gets done processing this video, drop it down in the comments section, as I do answer most questions. Okay? And other than that, I guess we're going to wrap it up. You guys have a fantastic day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody. Cassidy, I bought it. I ordered the new computer. They said anywhere from 10 to 21 days. So, yeah, it could be up to a month. But it is on its way. I did buy it. It has been paid for. It is just being shipped. And it is a monster. I can't wait to get it. Cannot wait. So excited. You guys have a great day. Thank you so much for being here. We'll see you Thursday morning. Same time. Same place. See you later, guys.